Britain learned early that money travelled farther than marching battalions ever could. Credit moves silently, invisibly, shaping nations without raising a single sword. And loans, once simple tools of commerce, became Britain's most powerful weapon. This revelation transformed financial deals into instruments of global political domination. Empires traditionally grew through conquest, warfare, and relentless territorial expansion across continents. But Britain realized borders mattered less than controlling another nation's treasury. A loan could reshape governments with more precision than entire invading fleets. Debt became leash, chain, and subtle instruments guiding foreign political behavior. It began quietly, with merchants lending coin to kings facing desperate wars. These early loans bought armies, fleets, and fortifications sustaining Britain's ambitions. But behind every pound borrowed, influence multiplied, binding monarchs to bankers. Power shifted from thrones to ledgers, where financial signatures dictated outcomes. London discovered manipulating interest rates more effective than manipulating battlefield formations. A small percentage increase could cripple rulers dependent on continuous borrowing. Britain mastered this weapon long before other empires understood debt diplomacy. Loans became promises with consequences shaping history through elegant financial coercion. As the 17th century unfolded, Britain refined lending into powerful international strategy. Merchants financed governments, governments backed merchants, forming intricate financial alliance. This elite partnership shaped national destiny through monetary agreements disguised as assistance. Debt became bridge connecting treasury, city, and empire into unified power machine. The Bank of England emerged as cornerstone of Britain's new financial architecture. Its stability convinced nations. British credit carried global reliability and unmatched endurance. Loans from London were perceived safer than alliances built through warfare. Trust became currency Britain used to dominate without raising military banners. Foreign nations approached London seeking financial stability amid turbulent economic conditions. Britain offered loans, but terms favoured London's long-term geopolitical advantage. Interest payments created dependency, gradually shifting power toward British institutions permanently. Debt diplomacy built empire without conquest, using economics instead of violence. During the Napoleonic Wars, Britain discovered loans could sustain conflict indefinitely. Other nations collapsed under financial pressure, but Britain borrowed strategically. These loans strengthened military capacity while weakening rivals struggling with debt. Britain weaponized borrowing, emerging strongest because its credit outlived European adversaries. By 19th century, the City of London had become global lending center. Governments worldwide depended on British loans, maintaining national economic stability. This dependency created invisible empire stretching across continents without territorial occupation. Britain ruled through ledgers controlling budgets, currencies, and political decision-making. Latin American nations borrowed heavily seeking modernization, infrastructure, and economic direction. But British loans carried conditions affecting trade routes, exports, and national independence. Railways, ports, and mines built using British capital strengthened London's influence. Debt turned sovereign countries into financial dependence, subtly shaped by British interests. Egypt borrowed for projects modernizing nation, including monumental Suez Canal construction. But debt spiraled, granting Britain leverage controlling trade lifeline between continents. Financial collapse justified intervention, enabling Britain to occupy Egypt indirectly. A loan became gateway enabling empire expansion under guise of necessity. In Ottoman Empire, British loans supported decaying states requiring modernization desperately. Terms restricted spending, enforcing economic discipline aligned with British preferences. Reforms benefited lenders more than citizens struggling under heavy repayment obligations. Debt diplomacy eroded sovereignty, turning empire into financially controlled dominion. India funded major infrastructure using loans structured through British financial institutions. Railways, telegraphs, and roads strengthened imperial administration, benefiting British commercial interests. Indian taxpayers bore costs funding projects, primarily serving London's expanding influence. Debt enslaved colony economically long before political independence became global debate. China faced unequal treaties, expanding foreign control through predatory financial arrangements. British banks provided capital, with conditions strengthening imperial commercial dominance. Debt forced China into concessions, shaping international relations for generations ahead. Financial manipulation sustained influence even after military conflicts concluded dramatically. Bond markets connected Britain's investors with foreign governments, requiring development funding. But default risks justified intervention, protecting British financial stability abroad. When nations faltered, Britain imposed conditions reshaping economic policy decisively. Debt became leash tightening whenever borrowers struggled fulfilling repayment responsibilities. London's credit rating shaped global confidence, influencing currencies worldwide dramatically. Countries aligned policies, ensuring favourable access to British lending networks. This pressure forged international economic order, centred around Britain's financial authority. Loans became diplomatic language guiding global political and economic direction. The concept of conditional lending became hallmark of British foreign economic strategy. Borrowers accepted reforms altering taxation, governance, and trade regimes significantly. These conditions disguised control mechanisms, enabling Britain to shape national policy. Debt emerged as tool manipulating internal affairs without direct political intervention. In Caribbean colonies, debt financed plantations, accelerating economic extraction mechanisms. Loans secured by sugar exports transferred wealth into British commercial hands. Financial structures maintained colonial hierarchy, reinforcing London's economic superiority. Debt enslaved plantations long after physical chains vanished from sugar fields. Pacific Islands borrowed under frameworks benefiting British shipping and commercial dominance. Terms restricted sovereignty, compelling islands serve imperial trade objectives. Debt shaped foreign policy, ensuring alignment with British maritime interests. Loans dictated national decisions more strongly than any distant colonial governor. African territories borrowed to build railways, transporting raw materials toward imperial markets. These loans improved extraction efficiency, benefiting Britain, all for the native populations. Debt chains remained long after independence, limiting new nations' economic freedom. Financial dependence succeeded where direct colonial rule eventually dissolved politically. Loans provided to allies strengthened Britain's diplomatic partnerships across strategic regions. But support required alignment, protecting British interests in global geopolitical competition. Borrowers followed Britain's lead, fearing withdrawal of financial assistance abruptly. Debt ensured loyalty, without treaties forcing long-term binding political obligations. During World Wars, British loans maintained alliances, preserving global balance against adversaries. Nations relied on Britain's financial strength, supporting extended military mobilization. Yet post-war debts ensured influence persisted long after conflict officially ended. Britain used loans to shape reconstruction, ensuring alignment with its interests. Between wars, Britain stabilized currencies abroad, preventing economic collapse, destabilizing empire trade. Financial support maintained international systems, preserving British commercial supremacy. Debt diplomacy reinforced global structures, positioning London at center permanently. Loans functioned as network connecting world economies through invisible financial chains. In 20th century, new international institutions adopted models rooted in British lending. Global financial architecture mirrored principles London perfected across previous centuries. Nations negotiated loans through frameworks echoing Britain's historic economic dominance. Debt remained weapon shaping development path of emerging global economies. Britain shifted from empire to modern financial power, maintaining global influence. Loans replaced armies, negotiations replaced conquests, and economics replaced strategy. Debt diplomacy allowed Britain influence without territory, occupation, or force. Control persisted through institutions, sustained by centuries of financial expertise. As decolonisation accelerated, loans replaced governance, ensuring indirect British presence. New nations needed infrastructure, stability, and international financial support urgently. Britain provided assistance under conditions, preserving strategic economic influence. Debt ensured relationships survived political independence without relinquishing economic power. Today's global financial system still reflects Britain's historic lending operations. Influence flows through markets, ratings, bonds, and central banking expertise. Debt remains central mechanism shaping policy across developing and developed nations. Britain's dominion endures through instruments engineered centuries before modern independence. This dominion is subtle, quiet, and woven into global economic structures. Countries rarely acknowledge influence, yet follow rules shaped by British institutions. Debt directs behaviour invisibly, guiding decisions made inside sovereign governments. Loans became London's empire, replacing colonial rule with financial integration. And though Britain's flag no longer flies across conquered lands worldwide, its financial power still reaches capitals through contracts written in London. Debt shaped borders, leaders, alliances, and national direction across centuries. It remains Britain's most enduring instrument of global non-military domination. By the mid-20th century, Britain refined debt into pure geopolitical leverage. Loans replaced colonies entirely, allowing influence without visible imperial administration. A signature achieved more than soldiers, making credit Britain's silent superpower. Nations bowed not to flags, but to carefully structured financial contracts. Post-war reconstruction created perfect conditions for Britain's lending dominance internationally. Europe lay broken, institutions shattered, currencies unstable, economies demanding urgent assistance. Loans flowed from London's stabilizing allies while shaping their political direction. Debt forged alliances deeper than treaties, binding nations through financial interdependence. Across the Commonwealth, newly independent states needed capital for modern development. Britain stepped forward, offering loans promising progress and future economic stability. But conditions ensured continued influence, guiding government policy across multiple generations. Debt became continuity, allowing empire survive through contractual economic frameworks. Infrastructure loans funded dams, roads, power grids, and national administrative systems. Yet interest payments strained budgets, forcing reliance on further borrowed capital. Nations entered cycles requiring British expertise, consultants, and financial supervision. Debt chains tightened subtly, creating dependency masked beneath promises of growth. Development banks mirrored British lending models, exporting financial discipline worldwide. These institutions reflected London's philosophy, emphasizing control alongside economic assistance. Borrowers accepted oversight in exchange for long-term fiscal stability support. Debt imposed order where political chaos threatened foreign strategic investments. Britain shaped credit rating standards, defining risk for international financial markets. A downgrade triggered panic, whereas an upgrade restored confidence globally. This influence gave Britain moral authority, steering global investment decisions. Debt ratings became political tools, disguised inside neutral financial assessment language. Loans influenced currency policies, interest rates, and national budgets decisively. Governments shaped laws ensuring favourable conditions for British international lenders. Domestic politics bent toward decisions benefiting London's long-standing financial architecture. Debt diplomacy created a world where Britain shaped policy without explicit intervention. Financial markets treated British institutions as trusted guardians of global stability. Nations courted support hoping favorable debt terms would strengthen fragile economies. Britain used this trust strategically, guiding long-term global economic direction. Loans secured influence without provoking nationalist backlash or international suspicion. During the oil crisis, debt shaped alliances, ensuring Britain's energy security. Loans to producing nations strengthened diplomatic ties, preserving critical trade routes. Debt offered incentives stabilizing regions where political volatility threatened British interests. Financial commitments turned uncertain partners into long-term strategic collaborators. In Asia, loans supported industrialization, though tied to British contractors preferentially. Projects expanded, but wealth flowed back toward London's financial institutions. Debt ensured profits circulated inside familiar networks, sustaining Britain's commercial dominance. Borrowers gained infrastructure, while Britain gained enduring leverage over future decisions. African governments, seeking stability, relied heavily on British bonds for funding. These arrangements shaped budgets, spending priorities, and long-term national direction. Debt controlled progress, guiding development toward models favoring British markets. Loans became architecture shaping decades of economic behavior across emerging nations. Even military partnerships were strengthened through strategic long-term debt arrangements. Financing equipment tied nations into alliance structures, benefiting British defence industries. Borrowers aligned foreign policies to maintain favourable access to future loans. Debt diplomacy replaced colonial force, achieving influence with minimal visible effort. London's financial lawyers drafted contracts deciding future of sovereign national assets. Collateral clauses gave Britain rights, surpassing typical diplomatic engagement boundaries. Debt transformed into legal mechanism, expanding British reach across global jurisdictions. Domination emerged not from warships, but from meticulously written paragraphs. Multinational corporations borrowed through structures centered around British regulatory frameworks. Tax advantages, stability, and trust attracted global companies into London's orbit. Corporate borrowing reinforced Britain's role as a central node of capitalism. Debt placed private giants under indirect British influence through economic dependence. The eurodollar market strengthened Britain's leverage through offshore dollar operations. Nations borrowed using dollars controlled by London-based banking institutions. Britain gained influence over global liquidity without owning associated currencies. Debt allowed Britain shape world markets from outside traditional power centers. Financial crises increased Britain's influence as nations desperately needed liquidity support. Loans stabilized currencies, preventing collapse of economically vulnerable allied governments. Every rescue deepened Britain's position as indispensable guardian of global finance. Debt diplomacy expanded during instability, when borrowers lacked alternative financial lifelines. In the 21st century, debt networks became more complex and opaque. British overseas territories facilitated financial structures, expanding global lending capacity. This offshore web strengthened dominion, allowing Britain influence beyond mainland institutions. Loans originated everywhere, yet influence consistently returned to London silently. Rating agencies based in London guided investor behaviour through risk evaluation. Their assessments shaped cost of borrowing for nations worldwide significantly. A single downgrade jeopardized budgets, elections, and national development projects. Debt became pressure point used strategically, without any formal political declaration. British universities educated world leaders, shaping fiscal philosophy for generations ahead. Students learned economic models rooted in British lending tradition and discipline. These leaders returned home implementing systems aligned with British financial thinking. Debt dominion extended intellectually, shaping ideology behind global economic transformation. Debt diplomacy continued subtly influencing international environmental policy negotiations. Loans for climate adaptation contained conditions promoting British technological solutions. Borrowers adopted systems benefiting British consultants and renewable energy companies. Debt leveraged environmental urgency, turning crisis into powerful strategic opportunity. Modern military partnerships still rely on long-term financing structured through Britain. Nations borrowing for defence projects align strategically with British geopolitical interests. Debt influences alliances, deployments, procurement, and diplomatic cooperation globally. Loans ensure military loyalties remain stable across decades of shifting politics. Trade agreements embed financial clauses, strengthening Britain's control over member economies. Nations accept these clauses, ensuring access to markets and global investors. Debt and trade fuse into single mechanism, guiding international economic behaviour. This integration reinforces Britain's role as central architect of global capitalism. In Global South, debt relief programs still carry economic restructuring requirements. These reforms mirror earlier British models, emphasizing discipline and fiscal control. Borrowers emerge stable yet more aligned with Britain's preferred global systems. Debt remains instrument shaping development long after initial loan agreements expire. Modern lending incorporates predictive modeling, analyzing future borrowing behavior precisely. Britain uses data forecasting to shape terms influencing national policy trajectories. Debt becomes algorithmic instrument controlling decisions through projected economic scenarios. Borrowers follow models believing objectivity while submitting to guided frameworks. Digital currencies present new frontier where debt diplomacy will evolve further. Britain prepares regulatory systems, positioning London central to global transactions. Future loans may integrate digital controls, shaping spending with tighter precision. Debt may become programmable, strengthening British influence through technological sophistication. Despite global changes, fundamental principle remains unchanged across centuries continuously. Control money lending, and you ultimately control national political destiny. Britain mastered this formula, transforming loans into instruments of imperial power. Debt dominion outlasted fleets, colonies, monarchs, crises, and ideological revolutions. No other empire exerted such influence without physical occupation or visible coercion. Britain achieved silent domination through signatures rather than swords across nations. This quiet mastery remains woven into global financial architecture, sustaining contemporary civilization. Loans built empire that survived collapse of older territorial imperial structures. Today, nations depend on debt systems rooted in Britain's historical financial innovations. Even powerful states require borrowing shaped by London's regulatory legacy. Every bond issuance echoes techniques refined across centuries of British dominance. Debt remains language of control spoken fluently by Britain worldwide. The dominion continues not through borders, but through budget decisions everywhere. Countries influenced by debt follow guidance built into financial agreements. Britain's power lives within spreadsheets, shaping futures of millions unknowingly. Debt diplomacy remains empire's soul, hidden beneath modern global economic order. Britain proved influence thrives when invisible, silent, indirect, and softly enforced. Loans became modern chains accepted willingly by nations seeking stability. Dominion disguised as partnership ensured Britain shaped world without resistance. Debt empire stands strong where older empires completely collapsed long ago. And as global crises multiply in exhausting cycles across coming decades, nations will seek stability through borrowed money structured inside London. Debt dominion will deepen, repeating patterns established centuries before today. Britain's quiet empire will persist as long as borrowing continues. If this story changed how you see power and money, remember, empires fade, but debt survives every revolution. Subscribe for more untold histories carved into the world's ledgers. Because the next empire will be built with numbers, not armies.